What's up? This is Wade with Trade ATS, and I want to welcome you to the 7 Insider Secrets of Trading Mastery. So, what this is a presentation that I've put together that compiles a list of the things that I think that if someone is serious about learning to trade, these 7 things are things that I feel cannot be ignored. I'm going to be giving these out as 7 individual lessons, so make sure that you like and subscribe to our channel so you can get notified when each new lesson comes out. Welcome to the 3rd installment of the 7 Insider Secrets of Trading Mastery. So what is the 3rd secret that I think you absolutely have to understand and learn about in order to be a great trader? Well, this is an important one. This is market cycles. Now, when I say market cycles, I'm not talking about the traditional macroeconomic cycle that's usually talked about by people like Ray Dalio. What I'm talking about is a very specific 3-phase price action cycle that every market goes through on every single time frame, right down from the 1 minute all the way up to the daily, weekly, monthly charts. That's what we're going to be talking about here. Understanding market cycles gives the basis for forecasting, timing, and managing your trades. All 3 of these things are critically important for a successful trading approach. Now I'm going to share a term that you may have never heard before. It's called the master pattern. The master pattern cycle is the technical price pattern that shows different time horizon traders or investors becoming active, opening, and closing out investments and trades. Now, one thing you should know about the master pattern is that this is not something that we have invented here at Trade ATS. The master pattern is our interpretation of a methodology that was started by a man named Richard Wyckoff way back in the early 1900s. It is really the study of watching large traders that trade a heavy volume, hold a lot of inventory. It's a study of tracking their activity and how they are going to typically manipulate the masses into coming in after them so that they can distribute that inventory for a profit. Sometimes you'll hear this called accumulation distribution. You'll hear it called smart money concepts. All those things. The master pattern is our interpretation and the framework that we've come up with to identify this activity so that any trader can understand it in a very simple, straightforward way and actually get off the ground and running with the methodology. That's what the master pattern cycle is. So getting back to our lesson, understanding where you are in a master pattern market cycle is key for all aspects of trading, that being forecasting market movement, timing your entries, and managing your risk and your exit once you're in a trade. So how do you master market cycles? So the first thing you need to know is what a market cycle actually looks like. So here we go. We have our 3 market phases here. The first phase is contraction. Some people will call this consolidation. The second phase is expansion. This is leaving the contraction zone. And then the third phase is the trend or the profit-taking phase. That's where the market moves from one contraction to a higher contraction or to a lower contraction. And in the middle of that, you have your trend. Okay, so this is where this lesson starts to get really fun. I'm going to take you to live charts in a second. We're going to do some real-time analysis and see what's going on. But first, I want to share just real briefly a super potent way you can immediately implement the master pattern methodology and actually find some really, really great low-risk, high-return trades. So hang with me here for a sec. If you see right here, we have the monthly chart on the right. We have the daily chart on the left. This is, again, just a screenshot of Euro USD. In this case, we're using the monthly chart as our overall directional bias. So you can see it's very stable. The monthly time frame is very stable, and this is going to pair well with the daily chart. I'm not suggesting that you use a monthly chart and then trade a 1 minute into the monthly. You would want to look at maybe a 15-minute or a 30-minute if you want to even attempt to trade the 1 minute. But in this case, a daily chart is a great pair with a monthly chart as your supporting directional bias. Now, if we take a look at the daily chart, you can see that we have our 3 phases being drawn out all the way down that run. Reading below, the expansion phases provide ideal entry points when combined with a directional bias. That's the key here. In this case, you would only trade them short. If you understand that the market unfolds in 3 phases, meaning a contraction, an expansion, and then a trend, by pairing that with a directional bias, meaning that when you see a contraction, and you're looking at, in this case, the monthly chart is clearly short, you know that that contraction is going to lead into this whipsaw expansion activity a lot of times. Sometimes you get a direct breakout expansion where it just immediately goes in trend. But the key is to wait for the whippy expansion. When you see that you're in that expansion phase, you can see how the highs of that expansion become great trading opportunities where you can get a really solid entry point in expectation of the predictable trending move that should take place in the overall monthly direction. This is a great way to prepare and really just pounce on the market when these opportunities present themselves. But it is key that you let these opportunities come to you. You do not want to force this. Let's go take a look at some live charts and see if we can spot this happening right now. So let's start off by taking a look at euro dollar. Let's see what's going on here. So right here I have a 5-minute paired into a 4-hour as the overall directional bias. So what we're going to do is we're going to try to figure out what is the cycle on the 4-hour. Let's see if there's a story here that really helps us project what the possibilities are and forecast price. Remember, that's the thing that the master pattern helps you with. It helps you to forecast where price could potentially go. So if we look at right here, I can see that we have a contraction right here, and I can see that we are in the expansion phase. So let's mark that up real quick so you can see it a little bit clearer. If we take our zigzag here and mark the top here, that's the expansion initially. Then we have a swing low, then we come up to swing high, swing low right here, another swing high. So the question is, where is this headed? Well, so there's a few things that can play out here. Number one, the market can reverse and continue to go long. That is definitely a possibility. We're above the value point right here, and eventually this is going to pick a side and trend up higher or lower. The next thing that could happen is if this move sustains right here, we could easily get a pop down back to value. You'll notice that the more expansion legs you get around a value, the more magnetic that price becomes. Right now we've had 1, 2, 3, 4, 5 expansion legs. So that has proven that this is a very significant level. That being the case, it would not be a stretch for that gravitational pull to pull this price down and at least have it come down and test around this level. So if that happens, obviously we could get a move from here to there that we can potentially forecast. Now you would want to wait for that to start playing out like it is on the 5-minute and look for a risk-controlled entry on the lower time frame. But again, this is just a projection. Now, if it gets down to this level, where's the next stop? Well, it could either bounce from there and continue to trend away from this value level, or if we get through this level, we can work our way down to the swing low point. That would just create another leg of expansion. So that's really where this is in the cycle right now. It could either continue to trend or we can stay in expansion. And these expansions can last, I've seen them last up to 8, 9 expansion legs before it finally moves. So even when it's in expansion, it is still giving you an accurate potential to project where price is likely going to go. We have great projection levels from where we are here down to the value point. If this continues to reverse, we could look for it to come up to the active high up here. If we get through value, we can come all the way down to the swing low where we have liquidity. So either one of those can happen. It's up to you to look at the lower time frames and see what starts to play out. And then when you see something starting to take shape in one of those scenarios, that's when you pounce and you find an opportunity. Let's jump down and see what's happened here. If you were coming off this high and you're looking at this 4-hour rotation as a potential to work back towards the value level right here, again, you already have an exact measurement coming down to value, so you know potentially the amount of pips that are in an opportunity like that. When you see this rotation, what would you be looking for? Well, based on the diagram we just went over or the screenshots we just went over on the PowerPoint, you'd be looking for an expansion going into a contraction. So right here, you can see that we had a contraction point form. See how we popped out of the top of that contraction, and then it whipped around a little bit, and then it settled in the predictable direction and went into trend. This was already yellow over here when this happened. You could see if we highlight this box, you could see it was on the very first 4-hour turn on that candle. Anything above value, if you're betting that this direction is going to hold, is going to be a great entry opportunity, and in this case, it's good. The question is, are we going to get any more? You can see we have a minor framework that is formed right here. We're actually above that value, but the one thing is right now is that we're out of session. So until the London and New York sessions get back going, sometimes you want to wait till you get into the higher volume times, and rather than put a trade in the middle of the day. We'll let this one be for the moment here. So on the euro dollar, we just went over what a multi-leg expansion looks like. That's where it kind of has that whipsaw back and forth expansion action. That's one type of expansion, but there's also another type. It's called a direct breakout expansion, and that's where you get a clearly defined contraction box, price breaks out, and sometimes it never comes back. There's so much strength or so much weakness in a market that it either immediately just keeps going up or it immediately goes down directly from contraction. That is also a possibility that happens probably almost about half the time. And it's something that you can prepare for and strategize around as well. Because as long as you know where the contraction is, then you can figure out what type of expansion is leading into trend. Is it a direct breakout expansion going immediately into trend, or is it a multi-leg expansion? And if you're not sure, then you could always just wait for something like the multi-leg expansion to present itself to you. Once it's clear and you see the multi-leg expansion, then you start interacting with it, because those are typically easier to deal with because they have a slower pace to them, whereas a direct breakout expansion is something you just kind of got to jump into and manage risk accordingly. So going through this, I have a small trade in here that I'm kind of testing the water with, nothing huge, but this isn't the greatest setup. I really don't typically prefer doing a lot of direct breakout expansion trading. But in this case, I'm going to see what happens here. But when I pulled this up, I caught this one on the scanner. It was one of the big gainers from today. And I saw the history of how this is performed, and I saw that there's been a direct breakout expansion down here. We can see we have our defined contraction. Here's our initial expansion. It didn't really have the need to do a multi-leg expansion. It was pretty much off to the races. So that cued you in that, hey, we're entering the volatility part of the cycle. A trend is coming, either up or down. And in this case, it was up. And we had a pretty massive move out of there. So I wish I was watching this back then, because that would have been much better. But either way, I see that is the history of this. What I'm hoping is that we get something similar out of here, and that's why I was willing to jump in long on this move. And that's really the only scenario that I'm willing to sit in here on and wait for. That is my trading idea. If it gives me anything other than that in the price action, it makes me think that that's not going to take place, I'm probably going to jump out. So I'm really counting on momentum to sustain in this trade. You can see that I jumped in right about here, and I did not get the most ideal entry. I really much rather would have jumped in down around this neighborhood right here below this last value point. You can see that we're stacking value. You see these white lines are what we call expansion lines. These are the value points that come off of multi-leg expansions. So we can see that the institutional momentum was already stacking long. I really would have liked to be in here, but again, I wasn't aware of it at that point. So I jumped in on this rotation. I'm in the money a little bit, but again, it's just a small position to test the water, see if it gives me another way to scale in and turn into a big trade. And that's it. But the point is, what I'm looking at here is I'm forecasting based off of the relativity to this market cycle. We have our contraction. I know that I'm in expansion. The question that I need to figure out is it going to be a direct breakout expansion like I would hope, or is it going to be a multi-leg? I don't know which one it's going to be. I'm just going to monitor risk. Thankfully, I'm in the money a little bit, so I've kind of bought my way into the trade, and then I can kind of add accordingly or take off accordingly. We'll have to see what happens. But anyway, that's how you can use market cycles on your higher time frames, figure out what's likely to happen on the higher time frame, and then reverse engineer from that projection on the higher time frame, reverse engineer into what you're going to do or what you can expect on the lower time frame to leg into that trade. So this stuff's really cool. I would really recommend that you take this seriously and put this into practice. Study the master pattern. If you want to go back and watch our videos, we have 2 videos that are specifically all about this that have helped a lot of people become profitable. So I would recommend going and studying those on our channel. And really everything on our channel really centers around this as our baseline frameworks and methodologies. So that pretty much does it. If you like this lesson, remember to like and subscribe to our channel. That way you get notified when we release the next insider secret of trading mastery. We'll see you on the next one.